Hello, my dear students. Lucas Commerce Academy, the power of accounting, welcomes you. Today, as a part of joint venture, we are going to discuss third method, that is when separate set of books are maintained. In this method, we are not going to record joint venture transactions in the books of co-venturers or books of A and books of B. Here, we are going to record the transactions in the books of the firm. We are the firm. Co-venturers can be taken as outside persons. Under this method, three accounts are prepared. Number one, joint venture account. We have idea on that. Second one, co-venturers accounts. We have some idea on them. And third one, joint bank account. Joint bank account is nothing but cash account. All receipts are entered on the debit side and all payments are entered on the credit side. It is personal account. Under this method, passing of journal entries quite easy when compared to previous methods. Under this method, the journal entries are: number one, when capital contributed by co-venturers, the entry for this is joint bank account data to co-venturers account. When goods purchased for cash, joint venture account data to joint bank account. When goods purchased on credit, joint venture account data to creditors account. When cash paid to creditors, creditors account data to joint bank account. When any other expenses paid, joint venture account data to joint bank account. When any co-venture supplies goods to joint venture account data to concerned co-venturer account. If any co-venture incurs expenses for joint venture account data to concerned co-venturer account. Next one, when goods are sold or contract price received in case of construction works, joint bank account data to joint venture account. Next, when goods sold on credit, debtors account data to joint venture account. When cash received from debtors, joint bank account data to debtors account. Then any commission payable to co-venturer, joint venture account data to co-venturer account. Then balance joint venture account. It indicates profit or loss on joint venture. And share the profit between the co-venturers. The journal entry for this is joint venture account data to co-venturer accounts. In case of loss, reverse this entry. Sometimes the co-venturers undertake to construct a building for a company. In that case, the co-venturers received contract price partly in the form of cash and partly in the form of shares or debentures. In that case, the journal entry is joint bank account debtor, shares or debentures account debtor to joint venture account. If these shares or debentures are sold in the open market, the journal entry for this is joint bank account debtor to shares or debentures account. If these shares or debentures taken over by co-venturers, the journal entry for this is co-venturers account debtor to shares or debentures account. Then the profit or loss on sale of shares or debentures transferred to joint venture account. In case of loss, joint venture account debtor to shares or debentures account. In case of profit, shares or debentures account debtor to joint venture account. Then balance each co-venturer account. Each co-venturer account balance indicates the amount due to co-venturer or the amount due from co-venturer which are to be going to settled in cash. If the amount received from co-venturers, joint bank account debtor to concerned co-venturer account. When cash paid to co-venturer, concerned co-venturer account debtor to joint bank account. Then balance the joint bank account gets automatically closed. So these are the journal entries are to be passed in the books of the firm. Okay. In next video, we are going to discuss another chapter. Till then, thank you. Thank you very much.